This is a quick start guide for the Excel Skills monthly cash flow template forecast versus actual. This template enables users to compile a cash flow forecast for any 36-month period and to compare the cash flow forecast with actual results. Let's have a look at the assumptions. So the business name can be entered here and is used as a heading at the top of the other sheets. The start date can be specified and determines the reporting period which is included in the template. The financial assumptions for the forecast income statement. What this section basically means is that all your forecast values need to be entered on your income statement. So the forecast income statement is included on the forecast sheet. As you can see, there's 36 monthly periods with annual totals. Okay, all the rows that require user input have been highlighted in yellow in column A. The code in column A, the first two characters refer to the sales tax percentage, which is applied in the sales tax calculations, and the second two characters refer to trade debtors or creditors calculations. So if a C1 is included, then the appropriate line items are included in the trade debtors or creditors calculations. If it's C0, then it's a cash income or expense and it's not included in those calculations. All amounts on the income statement must be entered exclusive of sales tax. So in this top section, we've only included two accounts in the turnover, cost of sales, gross profit, and gross profit percentage sections. If you want to insert additional items, you can insert entire rows between the two that we currently have there and do it in all four sections. The cost of sales and gross profit are calculated, so you just copy one of the other formulas and then you enter your turnover and gross profit percentage values. As you can see here, we've included 100% gross profit percentage for the service-based income line item. If you only have service-based income in your business, then you can enter 100% gross profit percentages and you can hide the cost of sales, gross profit amount, and gross profit percentage sections. Okay, other income and operating expenses are also user entered. You can edit your descriptions in column B to match your business, and you can insert additional rows if you require additional expense items. Staff cost section is similar. It's also user input, and depreciation and amortization is also, you need to input your values here. Interest is calculated based on the four amortization tables, loans 1, 2, 3, and the leases sheet. Taxation is calculated based on an income tax percentage and other assumptions on the assumption sheet, and dividends also calculated based on your forecast assumptions. All the totals are calculated automatically. So let's go back to the assumption sheet. The next section refers to calculations of some balance sheet items, but they are actually amounts that are entered on the cash flow statement. So the forecast cash flow statement is below the forecast income statement on the forecast sheet. Again, all user input lines have been highlighted in yellow. If you see a green code, it means that a positive value is expected, and if you see a red code, it means that a negative value is expected. So these balance sheet items that are entered on the cash flow statement, the balance sheet values are determined based on the cash flow statement movements that are entered here. You'll see your proceeds are from loans. These amounts are included as additional loans on your amortization tables. Okay, and that's basically your forecast cash flow statement. If you go back to assumptions, the next section relates to working capital. So your inventory days, debtor days, and creditor days assumptions are used in the calculation of your inventory, trade receivables, and trade payables balances on the balance sheet. The payroll accrual is calculated by entering an accrual percentage as a percentage of staff costs. You can specify the frequency of payment in months, and then you can specify your first payment month. You can also select current or subsequent. If you select current, then your payment amount is calculated up to that current month. If you select subsequent, your payment amount is calculated up to the end of the month of the preceding month. Okay, sales tax rates can be entered here, and you can also specify payment frequency, first payment month, and select current or subsequent. Income tax, you enter income tax percentage. You can enter assessed loss carried over if applicable, and then specify a payment frequency in months, first payment month, and select current or subsequent. The next section includes the loan terms. These loan terms are then applied to your amortization tables. The amounts of the loans are determined initially based on your startup balances, and then also by adding the additional loan amounts that are entered on your cash flow statements. Okay, the balance sheet opening balances section works like a trial balance. So assets are entered as positive values, liabilities and equity are entered as negative values, and the total of all your opening balances must equal 0 like any trial balance. The last section is for dividends, where you can enter a dividend percentage as a percentage of net profit, and you can enter payment frequency in months, first payment month, and select current or subsequent. Current being the payment in the same month, and subsequent being payment in the month after that. Okay, so in terms of your forecast balance sheet, that's included on the balance sheets sheet at the top, and all amounts are calculated automatically based on your template assumptions. Just to have a look at the amortization tables, as I indicated, opening balance, if applicable, comes from the startup balances on the assumption sheet. Additional loan amounts can be entered on the cash flow statement. The interest charges that are calculated are included on the income statement, and the capital repayments are included on the cash flow statement. It's the same for all three loans and the leases sheet. So we go to the actual sheet next. So all your forecast calculations we've covered now. The actual results are entered. So this is your actual income statement. Again, we've indicated with yellow highlighting where user input is required. So everything is basically entered based on your actual results. That's for your income statement, even your interest that needs to be entered, tax as well, and dividends. And then your cash flow statement, most of it's calculated because with the actual results, you enter your balance sheet balances, and the cash flow is therefore calculated from your balance sheet balances. It's only really the proceeds from loans that we have user input for here. Okay, so let's go to the balance sheet. The balance sheet for the actuals is below the forecast balance sheet. You'll see that the opening balances are calculated based on your balance sheet opening balances on the assumption sheet, and then everything else, all the other columns, require user input. The only exceptions are these three lines indicated in blue, which is your cash line or bank overdraft if it's negative, and retained earnings. That's calculated, the rest you must enter. Okay, so then we go to the report sheet where your forecast and actual results are compared. So this entire sheet is automated. The only user input is selecting the appropriate month at the top of the sheet. As you can see, it starts with the income statement, then the cash flow statement, and then the balance sheet. Okay, and it has a month and a year-to-date comparison of forecast versus actual. If you make any changes to your income statement, you also need to make the changes on this sheet. For example, if you've added items to the turnover and the cost of sales and gross profit section, you'll insert the required number of rows here as well, and you'll just copy the formulas from one of the existing rows. And that's basically it. If you need more guidance on this template, refer to our detailed instruction sheet, and you can also have a look at our support section on our YouTube channel, where we post videos based on user feedback.